G'day, everyone. Back to another episode of the Australian Property Investment Podcast. I'm your host, Aaron Christie David. And if you're a regular listener, welcome back. And if you're brand new, thanks for joining us. And you're in for a real treat today. You know I like to bring experts in the property space, people that have been around for some time, people that have built portfolios for themselves, their clients, and blaze the path in the property investment industry. If you're keen to know who our guest is, he's been around for some time. He's authored a number of books, and we're thrilled to welcome Michael Yardney from Metropole. Welcome back, Michael. How you doing?
Thanks for having me back again, Aaron.
I'd appreciate it. Since our last chat, how's life been treating you?
Well, we got through another year in 2023. And when you get to my age, I turned 71 a couple of weeks ago.
Yeah.
You appreciate if you've had a healthy, happy year. My health has been good. My family have been good. I've got quite a few grandkids and another one on the way. Pam and my wife and I went to overseas for 3 weeks, and my property portfolio grew in value. So what more can I ask?
Right, touch wood. I love hearing that. Overseas trip, where did you guys go to?
We went to Switzerland. We've been to Europe a few times, but this time around we went on a train trip through Switzerland, lots of little trains up in the Alps, the Glacier Express, and it showed me how precise they are. They leave on the second. They're something other countries in the world could learn.
Mate, a lot of countries could learn from Swiss precision. So, man, it sounds like a great trip. You mentioned about, I guess, property. How has 2023 unfolded for the team at Metropole?
Well, at Metropole, one of the big changes at the beginning of this year is I stepped back from being CEO. I founded the company in, the Metropole Properties in 1979, but we've been working with clients for over almost 25 years now. And I decided to step back and enjoy those things we're talking about. But we've got a team of over 80 people, and we've been very busy. But in fact, I guess our business was a bit like what the property world was. In many ways, it was a year of two halves. At the beginning of the year, the world was nervous, people were nervous, property investors were. But those who had the long-term perspective, boy, has it paid off for them when we look back over the last 12 months.
Absolutely. That's one of the big questions I had for you. And when you reflect on 2023, and like you said, at the start of the year, there was a little bit of that trepidation when we talk about the fixed rate cliff, and here we are, in the end of the year, and there was a blip on the radar. We take 13 rate rises. We take, what else have we got? Migration hitting all-time highs. We talk about inflation, building collapses during 2023, the rental market, worsening and being a real squeeze on renters. Yet property prices have continued to surge. Has this surprised you? Has this defied the odds? What's your read on the market at the moment?
Well, at the end of 2022, we saw the signs of a good year in property in 2023. So there were a lot of, and by the way, it's really hard to predict the future, and I don't get it right by any means all the time. But what I think has happened from going around the block a few times is I can see patterns. And so while a lot of people were looking at data and they were sitting in their ivory towers and worried about a recession in Australia, worried about a fixed interest rate cliff, worried that property values were going to go down, this time last year, all the big banks all predicted at least double-digit property price falls, not growth. And a lot of the economists, and there were some very big ones who I respect, predicted 20, 30% property price falls. But I was on the record last year, and I got it right once, was that there was going to be a rise in property values because of migration, a lack of supply, rising asking prices. Asking prices are a leading indicator. It happens before rising auction clearance rates, all those sort of things. So, but it did surprise me how strong and how resilient the market was. And I guess the other real big surprise was I didn't think there'd be as many interest rate rises as fast in 2023.
Yeah. I mean, in all your time of property, you mentioned before that you kind of kicked off around 1979. Well,
that was Metropole. I first started investing in the early 1970s, and the times were not dissimilar. It was expensive. Property was expensive. I paid $18,000, and I actually went halves with my parents for property in Larch Street, South Caulfield, and I got $12 a week rent. but inflation was high and interest rates were rising, and inflation caused a rise in hard assets like real estate. I mean, I didn't understand the economy then. I didn't understand any of this. I just took a punt at the time. Probably good that I didn't understand it all. Otherwise, I would have probably stepped back like a lot of other people did. But yes, I've been around for well over 50 years in investing now.
Yeah. I mean, you've seen it all. And coming out of this year and heading into 2024, what is your outlook and what's your read on where the market may head as well?
Well, I see a number of factors pushing the market forward and a number of factors pulling it back. If we look back at 2023, because it will give us some insight into what could happen in 2024, it was in many ways a year of two halves. At the beginning of the year, there was lack of supply of properties for sale because sellers were nervous. Over the year, consumer confidence has been the lowest it's been for a long, long time, not since the global financial crisis. And people don't make big consumer decisions like buying a home or buying an investment property when they're worried about their finances or the future or the government or things like that. But the second half of the year, vendors started to come back in the market. And it was interesting because still with all the ANZ Bank and Westpac consumer confidence reports, in general, we're feeling more gloomy than for a long, long time. But people just decided, I'm getting on with life. And the cliffhanger of the fixed interest rate cliff really didn't come to fruition. And they realized that life's just got to go on. And the interest rate rises annoyed people, but they learned to cope with it. And the reason I've gone back with that, Aaron, is because it sets the scene for 2024, because despite interest rate rises and the media telling us things are going to be terrible, the big driver was lack of supply at a time of increased demand required by a very growing population. And so I believe that's going to be one of the main drivers moving forward in 2024. Basically, supply and demand, consumer confidence, and demographics, how we want to live, where we want to live, how many of us will want to live are going to be the main drivers. And yes, interest rates will be a factor and the geopolitical problems will be. So I see some things pushing the market up and we can have a chat about those, but I can also see some headwinds that are going to hold it back. So we can't have such strong capital growth into 2024. You can't, the cycles are getting shorter nowadays. They're not 7 and 10 years between peaks. Having said that, if we keep having double-digit growth, as a lot of Australia has experienced in 2023, the cycle's going to be over very, very quickly. So more moderate, more fragmented growth in 2024.
It's interesting. I watched your interview with Dr. Andrew Wilson as well, who's obviously a great market commentator, been around for quite some time as well. And what you just said there recently, going, we can't possibly have double-digit growth or strong market growth, for example. But then you look at, I guess, we still, I mean, my humble little business has a pre-approval pipeline. It's bursting at the seams. I speak to other brokers and their pre-approval pipelines are bursting at the seams. And that's just through the broker channel. Then there's people who pre-approved through banks as well. And then there's, a large predominant cash buyers, that we speak about that phenomenon in Sydney too, probably Melbourne.
That's one of the big things that surprised a lot of people this year, wasn't it, Aaron? How many people weren't affected by interest rate rises because the downsizers had cash. PEXA showed that a third of transactions over, not the last quarter, but the one before, I don't think we've got the last quarter's figures yet, were without a mortgage involved, without a bank involved. Yeah. And then there was the bank of mum and dad. That got people through, didn't it?
Absolutely. So these are all the markers, and I'm personally looking at it going, but these are all the reasons why we're going to see, people have gone through the worst 13 rate rises, maybe coming into 2024 with some buoyancy, with migration picking up, going, if I don't get in now, or don't get in 2024, it's just going to continue to elude me to try to get into the market. Therefore, with less supply, more demand, it should hold prices at, if not steady, see a little bump up as well. And so I guess that's my read on the market. Again, I'm putting it out there.
I think that's a very fair assessment. So it's interesting. Over the year, the property bears went back into their caves. They hibernated for a while. But at this time of the year, when people are asking for forecasts, for predictions, the media rings me and a lot of people and says, what's going to happen? What are the hotspots for next year? and I don't have forecasts. There's something we can go into in a moment. I have expectations, and it's very different. But basically, a number of them have come out with negative sentiment for next year, and property prices falling based on the same things they were talking about 12 months ago. High interest rates, mortgage stress, affordability issues. But you're right in my mind that one has to look at the leading indicators, and finance pre-approvals are one of them. In other words, people in general get their finance before they go out, and that not everyone goes ahead. We know that. Not everyone who gets a pre-approval does. So you've got to look at the trends of that. You've got to have a look at the trends of consumer confidence, and also auction clearance rates are a very good in-time indicator, not an exact rate, but the trend of them. So migration is going to continue. Rents are going to keep rising, and FOMO has already kicked in. People are worried, as you say, the fear of they've missed out. Some people are just, well, can I make a prediction? Am I allowed to make a prediction on your podcast?
Go for it.
I'm going to predict that in 12 months' time, we're recording this in December 2023. I'm going to predict that in 12 months' time, we're going to be in December 2024. And I bet you'll get that one right. The next one is, I predict that there'll be people listening to this who are going to step out of the market. They're going to be nervous. They're going to be upset. They're going to be scared. Some are not going to be able to hold on because they've taken on more mortgage than they can afford. So some people will get out, and they're probably going to look back and regret it. I'm predicted the majority of people are going to just sit and wait and see, and wait for all the news to be good, and wait for everything to all align, the stars all align right. And I also predict that a small percentage of those interested in property investment, and your podcast is the Property Investment Podcast, and home buyers also, they're going to take action. They're going to go against the trend. They're going to buy a property. And just like those who bought a year ago are looking back now pretty smug, those who buy early in the next year are going to look very comfortable at the end of the year in 12 months' time, because by that time, I think interest rates are going to start to creep down, and the supply issue is not going to improve, and that's going to push up property values, not to the same degree, but there'll still be, maybe, it depends where, but 3, 4, 5, 7% higher around Australia.
Yeah, I like it. And this is where I guess when we're willing to put our I won't say reputation on stake, but going, hey, look, if we're that vested in the market and we're meeting with multiple clients, then naturally we've got to read, and people are coming to us to go, what's your read on the market? Now, again, we may not always be right. But there's some indicators here that we're looking at. And you mentioned one around, auction clearance rates. There's another one that I've been, following, which is active bidders. And active number of bidders is increasing as well, which means
the depth of the market is what you're mentioning. There isn't just one buyer for good properties.
Correct. So only one person can buy that property. There might be a few that average 4 or 5 that miss out. Those 4 or 5 are then multiplying on the numbers that are missing out, and it just keeps compounding the people that just keep missing out. Going, right, they'll generally at some point overpay to make the pain go away, and that's what we see. The frustrated buyer has that blip where they go, how did that property sell for that much over reserves or that much over? It's like they just got so frustrated they wanted the pain to go away.
There's another thing that vendors, if they see the property up the road sold for $750,000, when they put their property on the market, that's their benchmark. It's not going to go down. So if an auction sells at a particular price, that sets the benchmark for similar properties in that area. No vendor is now going to, with the market moving, accept less. They only want more.
Right.
It spirals.
Spot on. I guess leading off this question, and again, some of the interviews you've been doing and I've been following as well, and a conversation that I have regularly is around home ownership. Is it unaffordable? Is it unattainable? But then also, whose responsibility is this? And I'm talking about property wealth. I'm going to capture home ownership and property investment in that as well, because there's been talks around how do we cut investors out of the market to then free up more either rentals, so take them out of Airbnbs, put them onto the long-term rental market, or cap the number of properties that investors can own, tweak with tax rules, for example. So I guess all this has been thrown out, postulated, for example, from a government perspective. Is it the government's role to make home ownership more attainable?
I believe it's the government's role to help the socially disenfranchised and the poor people. We live in a capitalist society. Many of us have chosen to come to this country, to live in this country. It's not a socialist country where the government provides housing for everybody. But if you look at the socialist or the communist countries, I think most people would rather live in our society, which has its faults. But I also know that there are people who will always, for mental health, drug issues, other issues, have challenges. And I believe it's my responsibility, yours, everyone's, to pay a fair share of taxes and look after those people. Separately, should Australians own their home? Well, I think it's the aspiration of most Australians to do that, but I don't think it's the right thing. And I'm going to annoy some people to bring down the value of your home or my investment property to make it more affordable for other people. I'd rather bring people up through education, through better jobs, through more skills, through good incentives from the government to allow them to buy their homes as well. But I've been around long enough to remember that home affordability has been in the media forever. I don't remember it in the 70s, to be honest, but in those days, maybe I wasn't paying as much attention. I do remember after the property boom of the late 80s that the media kept saying that prices can't keep going up. Our children will never be able to afford a property. I have read newspaper articles, clippings, archives of it happening in the 1920s during the land boom times. So I guess it's an aspirational thing. Interestingly, as we've already mentioned a couple of times, a lot of people are coming to Australia from overseas, migrants, with the aspiration of owning a home where they can't overseas. So are property investors stopping them buying a home? Yes, I'm biased, but I don't think they are. Property investors in Australia are providing a service the government isn't. About a third of Australian families rent, and not always because they're poor. They sometimes rent. In fact, the last project I've just completed a week ago, two homes. We pulled down an old home. One of the things we do at Metropole is project development for clients, allowing them to be armchair developers. And we pulled down an old house in Cannon Hill in Brisbane and built two homes that are quite expensive, double the median price of Brisbane, 4-bedroom, double garage. I took possession from the builder on Monday, first opened for inspection on Tuesday, one leased for $1,200, the other for $1,300 a week. People at that level want to still rent because one sold their home and they're about to build over the next couple of years. The other one rented because there's actually a great school for their kids and they'd rather put the money into private schools. So tenants are not necessarily tenants because they're poor, but somebody's got to provide accommodation for them. And in other countries, the government has chosen to do that. The government can't currently even provide sufficient public housing for those who can't afford private housing. So it's left to listeners of this podcast, to your clients, to our clients, to buy an investment and provide that accommodation. And 92% of rental accommodation is provided by small business owners like you and me, who most of them don't even get past their first investment property. That's not stopping the person down the road buying a home. That's people looking after their financial future because they're worried the government won't.
Yeah, well said. Well said. That forms a bigger discussion in and around wealth creation for retirement as well. If you were, I'm going to put you on the spot here. If you were running the country or making some decisions around housing and how we could improve housing affordability or home ownership for more Australians, what are some of the levers you could pull? What are some of the thoughts, ideas that you could have there, Michael?
Well, that's really interesting. You said 4 or 5 years because the government can't do anything quickly or instantly. So there's this story about building 1.2 million new homes.
Totally.
The government's not going to over 5 years, and it's only starting next year. And the government's not going to build any. They're not going to lay any bricks. So they've got to create encouragement. And what they're doing is looking at two separate issues, the rental issue and the housing affordability issue. With the rental issue, I've got a really simple answer, real quick, and it can work very, very quickly. It can work within a month. And that's provide further incentives for people listening to this podcast, for your clients, my clients, to buy investment properties. give us a level of certainty. We know currently more investors are selling up than ever before. There's always a turnover of investors. Some sell, some buy, but over the last couple of years, the net growth of investors has been minimal because more investors are selling up. Now, some have taken on too much in the way of debt. Others are just worried about land tax changes, Airbnb changes, other changes. So give investors who are business owners, who are taking a commercial risk and not always making a good profit, certainty, and they'll come back and they'll provide accommodation. The housing issue is more a town planning issue. We need supply of the right properties in the right areas, and that means that we are going to have to, like many other big developed countries, have more medium density accommodation. Now, in New South Wales, only over the last week, the Premier has announced some changes in planning to allow more medium density. So I'm not suggesting that in the middle suburbs we have 20-story apartment buildings. I believe moving forward, more people are going to be happy living in townhouses, big accommodation on compact blocks in closer areas. So the NIMBYs, not in my backyard, are going to have to become YIMBYs and actually accept a level of more development in their area, but good, appropriate development. And that's in the background of the government's policy of building 1.2 million more dwellings over 5 years. They're wanting to encourage local councils to accelerate development, but I'm not sure how easy it is to make it work. Maybe the answer is take away development approvals from local councils, because local councillors, if one or two neighbours in the street say, I don't want it, the councillors seem too ready to say, no, you can't have the development.
I mean, there's a challenge. You talk about building outwards, for example. I'm not saying you in terms of saying the commentary is, okay, we can build outwards, but I mean, inside Sydney, take Melbourne, for example, there's only so far out you come before you're spending 2 hours commuting to and from a CBD, for example, versus building upwards.
That worked in the past, Aaron.
Yeah.
That's the way we grew then. I don't believe it's the way we should be growing moving forward.
Correct. So if we grow upwards, for example, and that's cool, we are changing the dynamics of Australian living, which is you're not going to have the quarter acre, which that's kind of dead and gone, but you're not going to have a 500 square block, for example. But also, is there then capacity to build, say, 3-bedroom units, for example, or 4-bedders even, where it's, say, closer to a CBD? You don't see too many of that style development, and it's like, have we got to think differently about the type of properties that we're building when we go upwards as well?
We've got to build the right sort of properties. Yep. And in Europe, people have family-friendly apartments. At the last building boom, we built very, very poor quality apartments, mainly aimed at overseas investors who are now paying the price. And most of those are going to be the slums of the future. So there's got to be extra concern about building the right properties. I see another problem though, Aaron, and that's the infrastructure. If everyone's going to live close into town, where are your kids going to go to school? A lot of schools are being closed down. Where are we going to have the health centres and the hospitals and not the infrastructure that people think of, the roads and the rails, but the soft infrastructure as well. But something that was touted many years ago that I haven't seen happen is construction over railway lines. It actually has happened overseas, and where they've got undergrounds everywhere. That think of all the airspace close to all our capital cities and close to the shopping centres and close to transport if you actually covered over some of the railway lines and built 3-story, 4-story apartments there. The government owns the land.
Yeah.
Already the land's there. You don't have to pay for it. Well, you're going to have to build extra infrastructure to hold it up so it doesn't cross the railway line, but that's another story. But we've got the land.
Yeah. Yeah. And this is what I think it's a new problem. So what's worked in the past won't work in the future. So, as a society, what got us here will not get us there. And we've got to be willing to think about different modes of living, different styles of living, different types of way of building, because it's very clear that with the migration coming in, this is not going to slow down, and we can't exactly kind of shut the door on migration because we need new blood, we need new talent. but then it's where do they go that becomes a real challenge
Yes.
for us as well. And so, yeah, what you're saying is investors are doing a lot of the heavy lifting in terms of providing accommodation as well, because the government just hasn't really thought that far ahead.
Well, again, if we're thinking as property investors, demographics is going to be important. How we live, where we want to live, how we want to live. And I recently interviewed Leilani Burra, who's the head of ID demographics, and they provide a lot of the demographic forecasts. I interviewed her for the Michael Yardney podcast. They provide the forecasts for the state governments. And they're suggesting that our population is going to have 7 million more people in the next 20 years, requiring 2 million more dwellings. And of that population growth, and so these are forecasts that local governments are using for their growth in infrastructure, the vast majority is going to go to Western Australia, well, not in that order, actually New South Wales, Victoria, Queensland, and Western Australia. But even more so, 62% of it's going to go to the capital cities. Yeah. People are still going to want to, while regional towns will grow, must grow, have to grow, don't fight the big gorillas when the majority of the growth is going to occur in the capital cities. Yeah. That's a huge task, a huge feat to provide accommodation for all these people. But if we believe we're going to have a wealthy nation, which we are because our economy is going to do well, we're still going to dig things out of the ground and sell them overseas. We're still going to grow things in the ground and sell them to Asia. We're still going to pay, get people to come here to pay for education. If our economy is going to do well and we're going to be a knowledge-based economy, and there's going to be more of us, that just underpins property values over the long term, Aaron, because you've got all the ups and downs in the short term about interest rates and consumer sentiment and government incentives and things like that. But the big factors are really family formation more than population growth, because if you have a baby, that doesn't require more accommodation, but how many families are forming and how wealthy those families are.
Spot on, perfect. There's a stat that has done the rounds, and I'll read this out for you. So the ATO, and this was done quite a few years ago, shows that 71.5% of investors own one property, 18% own two property, and they say just 9.7% own properties, 3+. And that's a stat that's done the rounds, for example. I mean, does that surprise you, those numbers?
Nothing new. So every year there's tax department tells how many property investors there are based on tax returns. Yeah. So they actually talk about taxable units. So I have a number of taxable units because I've got quite a number of trusts and companies that own property. So it was under 20,000 taxable units owned 6 or more properties the last tax figures that came out, which was in June this year, but it was for the 2021 year because that's when the tax returns came in. We've only just sort of put in our tax returns for the recent year. So I think we're going to find even less. So I guess the answer is most property investors fail. What it doesn't say or show is that 50% of those who get into property investment sell up in the first 5 years. And the latest pain and gain report from CoreLogic suggests it's actually even a shorter period of time many investors have owned properties. So property investing may be simple, but it's not easy. And that's not a play on words. It basically means that it's hard to have the long-term focus. And maybe we can have a talk about why most investors never get there, but it's not a new statistic. You and I keep reading about property investment, and your listeners will be reading about that because they love that and hearing podcasts about that. But to the outside world, most of them don't even get involved in this.
Yeah, I guess it's a bit of an echo chamber because you and I are surrounded by people that decision makers and action takers when it comes to property. So all we're kind of seeing and hearing is people that are making decisions about buying properties and building their portfolios. And I guess we're very fortunate to work with a lot of the 20,000 that are scaling up their portfolio. I guess for me, it's when they get stuck. It's a number that surprises me. And I thought that maybe the COVID data hasn't flowed through. That might come next year.
Yeah.
I would have thought more people would have bought properties in that time, given that, serviceability increased, there's a rise of buyers agents. There was that, that largely positive cash flow. It's obviously pendulum swung heavily to become negatively cash flowed as well. So I guess time will tell about how those numbers have tracked, and do we have more people that are scaling up with success as well?
Well, an interesting thought, Aaron, is that over the years you've been in property and I've been in property, there's been a lot more information. There's lots of podcasts, there's lots of blogs, there's so many YouTube channels and videos, and yet that statistic hasn't changed. Yet 50% of investors make mistakes and sell up in the first 3 to 5 years. Yes, most investors never get past their first property. So I guess it's because there's a lot of vested interests, and the people giving, I was going to say people giving advice. There's no regulation to who can talk about property or give advice about property. So in the last booms, not just recently, the one before, a lot of investors bought off the plan property. Many of them, as we said a moment ago, had building issues. Others of them just they paid too much. They were in the wrong location. They had the wrong facilities. So people are being sold to by advisors, so-called advisors, who've got a vested interest. And that's because most people, there's 25 million property experts in Australia. Most people have lived in a property or rented a property, so they think they know about it. Just because somebody's got an opinion doesn't mean you should take their advice. So most people start off with the property. I get on my website the whole time on Property Update, people say, I want to buy a property. They even sometimes give me the address of a property and ask, would this make a good investment? And the answer is, I don't know. It's not the property. They start with the property rather than with the strategy and where they want to go. And what's a good investment for you, Aaron, would not be a good investment for a beginner because you're at a different level. What's a good investment for me at my stage of life would be different to your stage where you're probably still accumulating things. So it's not the investment. So be careful who you take advice from and make sure that they're playing the same game as you. So I think the reason that the statistic, despite all the information, hasn't changed or maybe has gotten worse is because most people start the wrong way. They start with a property or a location. Yep. By the way, that's exactly how I started. I knew no different. I just happened to luck it. I got it right at the right time, but there wasn't information around. Or others at the moment, there's a lot of information and data out there, and there's a whole range of new people giving advice saying, we have the data, we have the knowledge, we have the big research, but they've been around a cycle or two. Anyone could buy a property in 2021, 2020, and did really, really well out of it. And it was more luck than anything. So I think you've got to get advice, be prepared to pay for advice from somebody who has got perspective of having been invested through a number of property cycles and can see the patterns that are there, Aaron.
Yeah, I love it. Great answer. Thank you very much. I appreciate that. I've looked at your blog ranks consistently as like one of the go-to property blogs, I'd say globally, but definitely in Australia, for example. And you've put
2.7 million unique readers last year. I was very proud of that statistic.
Oh, I mean, it's a real testament to putting information out there.
A lot of work in it, yeah.
Absolutely. And nothing easy is going to be without some work and effort. So well done. Huge kudos there. But a lot of your content doesn't talk about, the hotspot, for example, doesn't talk about, look what we've done. It talks about the mindset. It talks about the attributes of investors. It talks about building the right team. And it almost feels it's left of center. And even looking through the books that you've produced, how many books have you put out? I counted like
9 books I've had published, which is really interesting because as an adult, I genuinely don't think I've finished reading 9 books. I'm not a reader. I read little things. I read a lot. I read all day, but I've actually never completed a book in my adult life other than one, I think. Okay.
All right. And what was that one book you think?
It was a biography of somebody I know who I won't mention.
Okay. Nice. I like it.
Autobiography that was very wrong. Okay. But good to hear the background gossip.
Yeah, nice. Okay. So when we talk about the barriers to entry, and I'm talking about this is not financial, so the income deposit are the obvious ones. But then we're talking about lifestyle. We're talking about bad decisions. We're talking about people being in someone's ear, for example. We're talking about detractors or not the right team that has the skill set, for example. They're the less obvious ones that where investors maybe trip up or fall over or stagnate, for example. What else have you seen in your time that you go, if you're an aspirational investor looking to scale up, what do you need to avoid and what do you need to double down on?
Well, I believe everyone's got a wealth thermostat, a financial thermostat. And Aaron, I believe that's been set as a child, probably by the age of 10 or 12. In other words, by things you've heard from your parents, things you've seen from your parents, things you've experienced. And even though you haven't done a lot with money in that age, it already sets the scene. Maybe a different way of saying that is, I believe if you took all the money in the world and distributed it evenly, I don't know, in 4 or 5 years' time, it'd be back in the same proportions again. Would you agree with that?
I've heard that thrown around and I would absolutely agree with that.
So why are some people more successful than others? And, well, interestingly, you said a moment ago about that 19,000 people in Australia who are successful property investors. What we did was we dug into we look after close to $1 billion, actually more than $1 billion worth of assets for clients in property management in Melbourne, Sydney and Brisbane. So we did a lot of digging and research to see what made some of our landlords so much more successful than others. And interestingly, there was something they didn't have in common. Some had high wages and some had low wages. Some were immigrants, some weren't. Some were educated and others weren't. So it had nothing to do with that. It actually had to do with the way they think. And once a year, I get together with a small group of high net worth people at Wealth Retreat who are prepared to actually pay to be around more people, because the people you hang around are the people, you've heard it said, you're like the five people you're the closest to. If you ride bikes every weekend and go around with people with Lycra, you probably wear Lycra and are thin and different to the way I look at the moment. So I think it has to do with the way you think and the people you hang around with. And you've got to, in my mind, be positive. There's a lot of there's a lot of pessimists on the internet at the moment. I have a few people who troll me on my YouTube channel, and I have a lot of fun allowing them to do that. That's the sign that you've made in
life, that when you've got trolls and critics.
Sorry?
Isn't that the sign that you've made it in life when you've got trolls and critics?
Well, I think so. That's one of the things. The other is YouTube loves it when lots of people comment on it, and it just spreads the word even more. So I let them do that. But they're negative. They can't see the good in things. I've never seen a wealthy pessimist. So what we looked at with those people, why are some more successful, is really, I think it has to do with a couple of things. It's the way they think. It's the fact that they had a strategy. So wealth doesn't just happen for them. Building a property portfolio didn't happen for them. In fact, that group of clients that we surveyed, the results of our clients, were 7.3 times more likely than the average investor to own 6 or more properties. So they had actually outperformed the averages. And I believe they did because they made the right decisions, because they got the right advice. So while most people will get advice on the internet and it's free, the most expensive advice is free advice that's wrong. So I still have mentors. In fact, just got off before we got on to this call with a weekly, hourly. I've got 2 coaches, mentors, business coaches that I still work with because I still want to learn. I still want to grow. So it's having the right mindset of growth and the right habits. Wealthy habits, rich habits. In fact, I've written a book on it, Rich Habits, Poor Habits. So it's what you do every day and how you think, because your thoughts lead to your actions.
Yes.
Your actions lead, your thoughts lead to your feelings. I'm sorry. Your feelings lead to your actions, and your actions lead to your result. So the results in the outside world have a lot to do with what happens in the inside world, Aaron.
I love it. And even there's something that I built off the back of that, which is a word called hubris. We get told this, and you mentioned this around your business coach, which is why we invest heavily in our business coaching as well, which is we don't know all the answers. We're going into new territory, and especially when investors have had a little bit of that luck, and it's like, I don't need the buyer's agent. I don't need the broker or something anymore. It's like, I'm just going to be able to do this all on my own. And it's that sense of overconfidence has led to a new problem or a new challenge. Because if you kind of put yourself back a little step, ego in check, and go, I'm still a student. I'm still learning. I'm going to surround myself with people that have been there, done that 5 steps ahead of me.
Usually I've found that people who have had luck actually need to have the hubris, the ego kicked out of them by the world doing it. And the world breaks every 10 years, like it did with COVID, like it did with the global financial crisis. There's lots of little ups and downs, but it's the really big stuff that breaks them. I didn't go broke in the early 90s, but I could have, and two of my good friends did go bankrupt. I owned a lot of commercial properties then. One of the mistakes I made getting into commercial property too early, and when interest rates went up, the values went down and the bank said sell. And I said, who to? No one was buying commercial properties at the time. And I got the stuffing knocked out of me a bit, but I managed to get through it. And then I went through a divorce unrelated to this. Yeah. And I'm actually much less egotistical. I guess that sometimes happens as you get older as well. So it's that interesting combination. You've actually got to have self-confidence and to go ahead against all the odds to become a successful property investor, business owner, entrepreneur. But you've probably got to learn from some of your errors and mistakes. Now, it's always said it's better to learn from others' mistakes, and that's why I write a lot of blogs about things others have done wrong, not to make fun of them, but to learn from them. And I hope I'm still learning from the mistakes, and I'm not making as many as I used to. But yeah, we still do in all areas of our life.
Love it. I love it. Great sentiment. On that note, we'll wrap up and say success leaves clues. And that's why we like to bring in people that have been there, done that, living and breathing property, business success, however you want to kind of define success. What they're really trying to do is inspire the next generation to go, hey, look, we just want to make property ownership and investment a vehicle that you can comfortably retire on. And I think at the very start, you said something about intergenerational wealth. That is one of our big missions, which is for clients to build a portfolio that their kids and their grandkids can become the beneficiaries of as well. When we play the long game, you're going to overlook 1 year of, 13 rate rises because, in 20, 30 years time, that's just a blip on your radar as well.
May I interrupt to say that is one of the other things I should have mentioned of the success traits of successful investors. They have a long-term horizon. Firstly, they understand the concept of delayed gratification to save and invest and get going, but they don't think about this year or next year. They don't make 30-year decisions on the last 30 minutes of news. So they think about the long term, and that sees them through, and it means the ups and downs don't affect them or annoy them as much, Aaron.
Yeah, well said. Michael, it's been awesome having a chat. I'm going to say we'll definitely be bringing you back on, not only to check in on yours and my predictions, but also get a feel on what you're working on next as well, which I'm super excited about.
My pleasure.
I want to say thank you very much for your energy. Thank you very much for your contribution as well. I really appreciate it. I'm sure our listeners do too. And if you're a listener that has got something out of today, please leave us a review, like and subscribe, or maybe tell a friend. Don't sit on this information as well. We want great investors sharing their knowledge, and that's what this is. It's about knowledge sharing and trying to pass on the baton for more people to be successful and investing in property as well. Hope you found this helpful, and until next time, take care.
Thank you.
Thumbs up. Awesome. Hey, Michael, thank you so much. It was awesome. Really appreciate it.
I had fun with that, Aaron. So can I make a suggestion? I think I did this last time too, because you're a very good interviewer. And sorry, I interrupted you a few times.
But
would you like me, again, I think part of what I'm trying to do at this stage of my life is pass it forward and share with others. So we talked about having you on my podcast for your book. Would you be okay if you give me the audio of this? Because I don't do the videos. Sure. I could, I guess, with this, and actually run this over the summertime in January as one of the episodes of my podcast, clearly with links back to yours.
Absolutely. I'll get the files across to you. We'll have that in the next couple of days for you.
Yeah. So I think it'd make a great show. And it was a combination of all the sort of things I've said in others. Yeah. So it all brings it back into one. And it's good for having other people interview me. So that's great. And congratulations on the book. Good luck with that.
Thank you, mate. I appreciate it.
It's not the way it used to be with books in the old days. I used to, the first book in 2006, How to Grow a Multi-Million-Dollar Property Portfolio. Yeah. I was proud of it, and I got quite a bit of publicity from, I think, even TV. Yeah. But nowadays, most of there used to be big bookshops and airports, and nowadays I sell a few online. Most of my book sales are, interestingly, because I've kept the digital rights, from Amazon and Kindle, more than physical books. But the aim of it was never to make money. It was really more to just get the name out and create the authority.
Yeah, exactly.
And I actually enjoy the writing process.
I think that's one thing. If you can get through that part and go, you don't see it as a chore, you're actually just downloading everything that lives in there. It's quite an easy way just to kind of get this all out of your head and put pen to paper as well. But it's become like a client business card now. I think everyone in property has a book.
Yes.
So you don't want to dilute the water, but if you can find your tribe, find your community that can connect with your message, you can't physically talk to that many people. It's a great.
But you were aimed more at first home buyers. Is there a reason why?
It's a prelude. It's effectively our first book. So my book trilogy will be how to buy your first home, how to buy your first investment property, then how to scale up your portfolio. So,
and what about your clients? Are they more first home buyers, or are they?
They're generally more advanced investors. So they're trying to crack that 3, 4, 5 investment property mark as well, which is why I'll do this as my medium to my investors. They want that quicker turnaround. Whereas I guess for the business, and as I step out and scale up, the lead magnet effectively becomes that first home buyers. We can get them in, and then we can take them on.
Yeah. Okay. Can I throw one more thing past you? Since because I enjoyed our chat, and I think again I probably overtalked you a bit, but
don't be so.
Fun conversation.
Yeah.
What if I help you at the beginning of next year by doing a masterclass? I've done that for a couple of mortgage brokers this year, and it worked really well. There are a few Brisbane-based ones because our Brisbane office is the busiest, just partly because of the price point. But basically, you would put it out to your database, your audience. Yep. You would be the host. You'd have the special guest on. I would talk about property in 2024, and you would talk there on finance in 2024. So there'd be, and we'd have people, and we'd do it live so people could ask questions. So the bottom line really is it's a way of you, let's be blunt, being on my stage. What it's going to do for you is hopefully get some business, but I'm also to be open about it. Hopefully from it, maybe you and I and Metropole and your company could just share a couple of clients and do something together.
Matt would love to. I'll get Rachel.
I'll send you an email with some ideas and thoughts.
Yep.
And we've got all the technology. We've got all the background. All you got to do is sit in front of a computer, and we'll do the whole lot. We'll even give you the EDMs to send out to your database.
Done. Consider it done, mate. All for it. Thank you very much.
Fantastic.